2025 market environments are very different than 2024. And in this video, I'm going to talk about what I think not a lot of people see coming with this market. And there are some real concerns. I mean, take a look at where we are with the S&P 500. And I made the point yesterday in my video that even if you don't trade the S&P 500, this is an indicator of the market shifting in front of our very eyes. The other chart that you could look at is the VIX. Check out the VIX. This is the thing not enough people who are focused on other markets than stocks are looking at. Look, stock guys, they're smart. Stocks and options people pay close attention to the VIX. But a lot of Forex traders didn't even know what the VIX were until I started talking about it in my videos more frequently. There's a lot of Forex traders who watch my channel. A lot of people watch gold. The VIX is telling us a story, and it's telling us something that is seriously concerning about this market. I want to show you, educate you some basics of the VIX if you've never really looked into it before. It's the volatility index for the S&P 500. And where one market is super volatile, it can often spill over into many others. If you want to talk about currency market moves that are much more extreme, much more pronounced, the VIX is usually accompanying that kind of price action and kind of movement. So if you've been looking at things like, for example, like pound yen, right? If you're a Forex person and you're like, wow, some of the moves have been very violent here. Or if you take a look at like pound US dollar as an example, right? Pound dollar has been pretty violent here recently compared to, when you have quieter periods of time. Recently, we've seen some more explosive price action, even in the euro US dollar. We would attribute this to an expansion in market volatility. And one of my favorite ways to index that is, again, to keep an eye on the VIX. So with the VIX up another 5% here and sitting at 29.24, what does that mean? Well, the easiest way to read the VIX is when it's at 29.4, that's saying that the options market is expecting, on average, it's pricing a 29% movement in either direction for the S&P 500. Contrast that when the VIX is at 15, it's saying in the next 1 year, I should specify, right? It's saying the next 1 year, a 29% move is expected compared to a 15%. You would imagine the differences in market environments when you're looking at a 29 versus a 15, right? Very different. Now, in this market environment, what does that tell us? How should we be better prepared? Well, many traders are caught completely with their pants down when it comes to the VIX, and they get used to trading in market environments like this. And when stuff like this happens, it completely blindsides them. So if you haven't done your proper back testing, I would encourage you to consider looking into the VIX more often and understanding, how does your trading strategy work in an environment where the VIX is very low? If you've had success when the VIX is low, oftentimes those same strategies struggle a little bit more when the VIX is higher. This is called wisdom in markets. You learn pretty quick that a strategy that's working really well down here may not necessarily hold up as well up here. If you're dollar cost averaging, it gets really difficult when markets start moving massively in one direction. So again, while the options traders are focused on this and the stock market pays close attention to the VIX, a lot of Forex guys and commodities traders, they don't pay attention as much to the VIX. And I think it's really important that we do make sure that we are looking at the VIX for an idea of how much market expected moves could we see? Are we going to see big swings? And what I'll say about the VIX is oftentimes the VIX overstates, it overemphasizes, and oftentimes when it goes up like this, I actually, the whole world is fearful, it's terrified. I actually usually take the other side of that trade and I sell puts and calls. And when you're selling puts and calls, you think that the moves will actually be less extreme than the VIX predicts. So with the S&P 500 down another 1.16% here today, what's going on and where is the bottom on this? I mean, we took out yesterday's low. The NASDAQ is actually holding up a little bit better than usual. I think we can attest that to the holding steady position of NVIDIA, which is pretty much flat in the time of recording this. Tesla is also slightly positive here today. Apple is down, but Amazon is holding up okay. So some of the big names are holding up this market a little bit better than perhaps the broader market, which is seeing a pretty sharp decline of 1% today. And how about gold, which is seeing a little bit of a push higher, looking really good. And I continue to hold my long position on this one. I've been sitting in a gold trade for, well, a little bit of time now. It's not gone a whole lot of distance, but it's been holding up much better than the stock market. So I've been long gold. I'm still in this trade. And again, any updates or changes that I make to this position, I will notify inside of the VIP group. If you're not not already inside of the group, by the way, right now we're doing 30% off. You can use the promo code and link in the description down below if you're interested in joining our VIP Signal service. Unlike most Signal services, I share public track records of my trading results. So when you join, you're not wasting your time on somebody who's never proven that they actually trade. I do genuinely trade. I've posted up my results on my YouTube channel. You can check out the homepage of my channel, or you can head over to our website, a1trading.com, and check out our stats over there. But any trades I take, whether it be indices trades, commodities trades, Forex trades, ETFs, stocks, and options, I trade a little bit of everything. And you can keep up to date with any positions that I take on or take off in the market as I send them out. Again, check out the link in the description down below if you're interested in checking out more. So with gold pushing higher, my thought process here is basically the same as it has been all week. We held support really well. We're in the context of what I think is a continued uptrend in 2025, and I'd be looking for a break through those all-time highs in order to look to trail my stop loss into profit on gold. Again, I still have a stop loss in the trade, so if this thing completely fails out, that's going to be my signal to go ahead and take a loss on the position. Speaking of metals, silver looks phenomenal here, actually bouncing higher. We can actually adjust this level of support. So you can see we came down, ultimately did find support around this 31 level, shot off of that area, found support here again at 32. Will we see a repeat at 33, right? We've seen the round numbers here holding really well for silver. And I've just filtered for metals on the Edgefinder's top setups algorithm, and you can see that silver and gold are both still getting really nice, strong bullish readings on the Edgefinder. And this has been, like I said, with my plans of being systematic this year, one of the best calls so far has been staying bullish on metals and avoiding chasing the indices too aggressively. Now what I've done is I've selected over here minor and major currency pairs, and I've removed neutral readings, and you can see that the euro and the pound continue to get bullish signals as they have for a couple weeks now, and at the same time we do still see some yen pair weakness. Aussie yen, dollar Swiss, dollar yen, Kiwi yen, Aussie Kiwi, CAD yen, Aussie Swiss, and dollar ZAR. This morning we got the JOLTS job openings, and I want to show you our updated economic heat map. You can see we added a date column and we color coded it so that when new data arrives, you'll see the new data is in orange, which I think is really useful for our macro fundamental traders who use our stuff. So check this out. So today we had JOLTS job openings. You can see it updated here today, March 11th. And there it is, the slightly better than expected JOLTS job openings report this morning, which sort of tried to buoy stock markets higher, but has largely not been enough. I mean, this market is really fearful on some headlines right now. Speaking of headlines, check this out. Trump raises the Canadian steel, aluminum tariffs to 50% in retaliation for Ontario energy duties. Donald Trump said he has ordered his administration to raise tariffs on Canadian steel and aluminum imports by an additional 25%, bringing the total duties to 50%, largely saying that this was a response to a tax on electricity exports to the US. So as this market sells off, I've been actually accumulating more shares of stocks that I like, and I do think, and I've said this in my live stream today, that the bottom for this market, I think, is closer than the top. And I think that, it's really hard to call the bottom of a market sell-off. But to be clear, as the VIX reaches these extremes, and we also have seen some really extreme readings on sentiment. Let me show you this. If we go over to the put to call ratio, you can see extremes all over the place, right? People really fearful. Put to call ratio going really high, telling you that people are buying puts left, right, and center. It's like a candy shop. People can't get enough puts here to try and protect their portfolios. Fear is reaching an extreme. By the way, the put to call ratio in the Edgefinder, we do allow you to also check out things like GLD, which is gold options. So we can see that there's actually been, at one point, there was some extreme kind of highly requested put demand, but we've moderated a little bit now, getting closer to call demand, perhaps as gold breaks out, people rushing into buying calls on GLD. Interestingly, we'll take a look at oil in just a second, but oil has some really high call demand currently as well. But with markets dropping so aggressively and people getting so fearful, I actually think that there is probably a good chance that we see a nice bounce on this market pretty soon, especially if we get down to some key levels of support like this kind of 5,400, which may seem very far away, but think about the trajectory at which we have sold off. It's very possible that we just kind of have another flush down to this 5,400 level, and all along the way, my plan is to continue to buy shares of stocks that I like for the long term. I'm finally able to start getting some names out there at discount discount prices that I believe in for the long term. And being cash heavy and patient has seriously paid off for me this year, as my account is pretty much flat on the year. Meanwhile, the NASDAQ's down like 7%. So being patient, again, in the long term can seriously pay off in financial markets. So I am finally starting to buy the dip on stocks that I like, and will continue to do so, especially if we start hitting some key levels on indices. I think that could bode well for some higher prices in the long term. In the short run, it might get uglier before it gets better. And a lot of people are fearful out there. Again, my YouTube comments have been full of people saying, this is the end of days, and stocks are going to zero and all this. And that's usually the time that I like to start going shopping. Dollar index also sitting at a key level of support, the 103.5 level, trying to hold here. Again, if this thing were to tank through those lows, this would be really good for the metals bulls out there. So dollar continues to look troubled. I mean, again, some of that economic data that we just discussed on the economic heat map is showing some red, right? Some missing expectations metrics. And so I think that is part of the reason why the dollar is getting repriced. I've said this before, and I still stand by this. I would not be shocked if we see the dollar index back at 100, kind of erasing this massive up move, which again, take it as you will. I think that this would continue to look really good for my positioning in TLT, which is bonds. I think that, dropping interest rates could be coming. And that could be, ultimately a good thing for stocks as well. But for sure, dropping interest rates would likely not be too hot for the dollar. Bitcoin's up 3% here today, bouncing back off of the high 70s, showing some nice resilience there. Let's see if we can actually start to put in some higher lows, higher highs in this one. But again, a lot of risk assets. Hard for me to really go heavy on them because simply price action looks so bearish at this time. Today's video is sponsored by Vantage. If you're somebody outside of the United States looking for a better Forex brokerage where you can trade CFDs, everything for indices, commodities, cryptocurrencies, and of course, Forex pairs, check out Vantage. They offer a generous welcome bonus to my subscribers, and all the information to check them out for yourself and do your own due diligence is linked in the description down below. And like I said, make sure to use the link that is in the description down below to support my YouTube channel, but also to take advantage of the welcome bonus they are currently offering to uniquely my subscribers. Doesn't mean we're not done selling. We may see that 12%, we may see that 15% correction in the S&P 500. It actually would be really healthy. I would actually love to see that. As a long-term stock bull, I would absolutely love to buy and build positions on the way down to a 15% or greater pullback. I mean, a 20% pullback, is that possible? Absolutely, it's possible. It happens in markets. And if you have a disaster situation, you can even get 40% plus drawdowns on the S&P 500. But for those of us who are not leveraged and not all in betting on high risk stuff, that is an absolute blessing in disguise. In my opinion, you do what you want. But for me, I'm sitting on a good cash size position. I'm sitting in a situation in which I have a long-term horizon in the markets. I'm 28 years old. I have time to sit back and wait. So markets dropping. If you're under 50 years old and you have a long-term portfolio, stocks dropping are the best thing in the world. They should be. You should wake up every day. If you are somebody who is long-term focused in nature and you're under 50 years old, the stock market dropping is a blessing because it gives you that long-term opportunity, in my opinion, to get shares at extremely good prices. I think the tech companies that we all know and love, many of them will go on to double and triple and quadruple. Not all of them. Some of them will go to zero. But long term, I think there's a lot of great opportunities out there. And if we do continue to see bigger dips, I am thrilled about it. I'm happy to buy the dip longer term and get that opportunity, right? In the meantime, I know I'm talking a lot about long-term investment stuff, but I do shift my focus a little bit in markets when you're getting stock market sell-offs, because then I start looking at stocks a little bit more. From like a buy and hold perspective, I don't like to buy stocks unless they're on sale, and I feel like they're actually starting to get on sale now. that could be a signal to someone out there. Oh, okay, Nick thinks stocks are going to bottom, then I'm going to sell. Do your thing. I get those comments all the time, and I find them kind of funny. But long term, I'm not looking to time the bottom for stocks that I like. But Uber, here's a couple stocks. I'll just, because I've been talking about it, here's a couple stocks that I like for the long term. Amazon, Google, ISRG, Tesla, Nvidia, Uber, Robinhood, American Express, PayPal, Palantir if it goes much lower, Fortinet, Meta, Airbnb, Salesforce, ServiceNow. These are companies that are really hot stocks that have gotten cratered here in recent times. By the way, here's Tesla trying to bounce here, up 3% today. S&P 500 down about 0.3. I know we've been very stock market focused here on the channel, and I know there's a lot of people who are like, Nick, look at gold. Nick, look at currencies. I will certainly do those things as well. But stocks are just quite interesting right now. Anyways, gold looking good. Gold's up almost 1% today. Love to see that. Love to see gold holding up on a day where stocks are down. A lot of my portfolio currently is in gold. So, here's the thing. I have two different mindsets when it comes to investing and when it comes to trading. From a trading perspective, I like to trade what's working right now. What's working right now? Silver and gold are working right now, right? The economic data missing expectations, trends to the upside, they look good for gold and silver, in my opinion, my perspective, and how I trade the markets. So I trade momentum. I trade with what's working in the short run. But from a long-term perspective, I'm much more, kind of contrarian, I suppose, like looking for opportunities of low prices. Anyways, couple public service announcements. I just put together, Chandler, James, myself, we put together channel memberships on the YouTube channel here. If you are somebody who has specific charts or questions that you would like me to answer on the live stream, we don't have any channel members, and this is totally up to you, but we've put together our channel memberships. If you have questions on the channel, I do my best to read chat, but I'm not very good at it. I have so much to go through in my head that I sometimes miss the chat. If you have burning questions and you really want me to take a second to answer them, I will prioritize your questions and your chart requests if you are a channel membership. For a couple dollars a month, you'll be supporting our work, and also you will fund our in-office coffee fund. That's the way we're expressing it. We go through a lot of coffee here at A1 Trading, and you'll get a couple things. You'll be able to help out the channel. You'll also be able to support our coffee fund, and I'll make sure to prioritize your questions. I know I will do my best to answer everyone's questions, but I'm not very good at chat. And I have a lot of stuff to go through when I'm on these channels. So if you'd like to become a channel member, you can check out the perks. You can join the channel. I had a conversation today with Johnny Hart on the Market Insights Market Pulse podcast about specifically the Trump put versus the Powell put, and whether or not this stock market sell-off that we're seeing could be saved by the Fed. Will they cut interest rates? Does Trump even care if the stock market sells off? Is a recession imminent? Take a few minutes to listen, and remember that if you'd like to check out the full podcast, it will be linked in the description down below.
But more specifically, you've really come on here to discuss what the Fed might do next, because there's no love lost, is there, between Jay Powell and Donald Trump, and it'll be interesting to see what the Fed comes out with over the next couple of weeks.
Yes, Johnny, let's talk a little bit about the Fed. Just continuing what you and Nick had mentioned about the R word, the fear of recession, and the fact that the markets are scared. I think we'd all agree that the last thing you want to see is that the Federal Reserve is looking scared. And right now, the Fed has been talking about not cutting when they meet in I think it's next week. So imagine if suddenly they decided to cut. That would probably make investors even more nervous about a recession.
Kenny, I also was discussing a little bit about the Trump put and the Powell put concepts. I wanted to ask your thoughts on something too, in regards to the situation, right, where we're talking about potential recession fears, let's just assume for a second that we do see a material slowing in the economy, key note being jobs. If we see jobs data come in soft, I'm curious what your opinion or what your thought is on the idea. Would the Fed cut rates if inflation was still sticky, but jobs data started to materially weaken? If we saw those weekly jobless claims start to perk up and get a little worrisome, do you think the Fed would act first on jobs or first on inflation? I have an opinion on it, but I'm curious to hear yours.
Well, it seems that I guess we'd agree that the Fed is in a bit of a bind right now, seeing that inflation, as you mentioned, is sticky, and jobs are coming down. Although the drop in the labor market seems to be quite gradual. We had 160,000 new jobs in the non-farms payroll last week, which was a bit higher than what was forecast. So I think the Fed is fairly satisfied with what's happening with the labor market. Inflation's still a bit high, but I think if inflation stays high and the job market were to go down, I think there's a good chance that the Fed would cut rates, but again, not till May, which gives them, I think, a bit of a chance to telegraph the market what they're planning to do. I think Powell's been quite good with that, and especially with this kind of market turbulence, they don't want to have any surprises. So right now it's about 50-50, but I think to address your question, if the job market did deteriorate more significantly, I think they would go ahead and cut rates.
Just to share my opinion, even though you didn't ask for it, I agree with you. I think that the idea would be that if you get inflation kind of where it is, right? It's not at the 9% that it was a couple years ago. It's not at 8, it's not 7, it's at 3, which that's the CPI, right? The PCE, I believe, is 2.6, core PCE at 2.5. Those are not ideal numbers, but the direction of unemployment is the important thing, right? We don't want unemployment to start trending higher. So I do think that might be what the bond market is thinking. That's why we're pricing in 3 rate cuts for 2025. So we'll see. But yeah, I would say that if you're going to get 3 or even more than that this year, it would definitely in my opinion, be due to the labor market slowing. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.